Hey, welcome back to The Dive. Today on the show, we have the CEO of Spey Resources, Phil Thomas. He's going to talk about lithium hitting new all-time highs, the geology of lithium, his thoughts on automakers going directly to the source of raw materials for their lithium needs, as well as he's going to give us an update on Spey Resources. But before we bring Phil on, do me one quick favor and just go ahead and tap on that subscribe button below me there so we can continue to bring you these videos. Hey, Phil, welcome to The Dive.
Oh, hi, Cassandra. Thanks very much for having me.
Yeah, thank you so much for joining us today. Okay, so let's start off with your background within the lithium industry. What led you to become involved in the sector?
I qualified as a geologist many, many years ago, and I had an interest in S&I type granites, and within them there were pegmatites and, of course, hard rock lithium. So in 2003, I became CEO of Spey Resources, and one of our properties was a polymetallic brine resource, and I had no idea what this was. In fact, I didn't even know what a salar was at the time, but I very quickly got involved, and then from 2003, we explored and went into the Rincon, and I became an expert on halite geology in about 3 or 4 years, and then it continued on with my interest. And in the early 2010s, we set up a company called Lithica, which then became the owner of some fairly significant assets. And of course, the lithium price dropped, so we had to sell them. But it was really just my exploration in Argentina and looking at the geohydrology, and it was an area that I got a significant interest in.
Now, lithium prices continue to hit new all-time highs. How sustainable do you think the current price trends are?
That's an interesting question because there are a number of factors contributing to the lithium price. Primarily, the gigafactories are creating enormous demand on lithium today, and that's why we're seeing the price around $75,000 US dollars, or 562,000 yuan. The price is probably sustainable until we get significant production coming into the system that obviously matches out demand. And I think that's probably a couple of years away. There's also a couple of other indicators where we've seen large volumes of lithium sold for enormous prices, like prices that don't make sense if you use the traditional discount cash flow method. For example, Pozuelos, that I used to own and work on with Lithica, recently sold for $925 million. If you added another $600 million of plant, your upfront capex cost is in the order of $1.5 billion. So, people say, "Oh, that's a lot of lithium," but at 10,000 tons at $70,000 a ton, that's $700 million of revenue. So the prices are skyrocketing. Lithium is probably no different to every other commodity in that it's cyclic. The question is, how long is the cycle, and how much demand is being pent up through the prohibition of production of diesel and petrol-fueled vehicles over a period of time. So it's really a timing issue on how long this boom is going to last, if in fact it is a boom. Should the price be $150,000 a ton rather than $70,000 a ton? Once again, it's back to the supply-demand question. So I think it's probably short-lived in the sense of probably 3 or 4 years, but I suspect there'll be more booms as we go out.
There's been a trend lately where automakers are directly going to the source for raw materials such as lithium. Do you think that this is a logical partnership for a miner to make, or does it largely benefit the automaker?
I think that it's probably not the right approach for manufacturers to be buying raw materials. I think they're much better off to be investing in the gigafactories, and the gigafactory should be buying into the raw material so that they've got continuity of flow of product. And they can basically manage their pricing, and I think they're the key issues with regards to the industry.
Now let's get into the geology of lithium a bit. Does extracting lithium from a brine, which is most common in Argentina and Chile, offer advantages over ore mining methods?
Yeah, I guess the main two methods are it's a lot easier to process because it's already in a liquid form. You're extracting the lithium ions out and then producing lithium chloride, lithium carbonate, lithium hydroxide, and other products. Up the chain, once you've got your lithium carbonate, you can produce lithium hexafluorophosphate, which is the feeder material that goes into battery electrolytes and cathodes. Hard rock is a little bit more complex in the sense that you've got to use heavy medium to separate the lithium oxide out, and typically it occurs at 2 or 3%, which is much more than what lithium grades are in brines. But the problem is that once you concentrate it up to 6 or 7%, which is quite a tortuous process relative to brines, you're shipping 94% of waste and 6% of lithium oxide. So the mechanics of it and the process of it is quite difficult. And by way of example, Ford recently signed a 350,000 tonne spodumene contract, which works out to be about 7,300 tonnes of lithium carbonate. So while the numbers sound huge, the actual end use product is quite small, and that's because of the concentrations. So lithium really is much cheaper too to produce from brines. The Ekosolve process is roughly around $2,500 a tonne. Most of the big players are sitting around $3,500 to $4,000 a tonne. Most of the spodumene manufacturers are $6,000 to $8,000. When the lithium price was $6,000, that was critical. Now that it's $75,000, anybody can make a profit. So it's kind of less onerous, but it's the time frame as well. You can produce from brines pretty quickly if you're not using ponds. If you're using direct lithium extraction processes, spodumene still takes a while.
Let's move on and talk about Spey Resources. Could you give us the 2-minute elevator pitch for the company?
Yeah, sure. Look, Spey's got two properties, Pocitos I and II, and one down at the Incahuasi Salar, right next door to Ganfeng, which have done some great work. The flow rates have been fantastic, and we're right next door. In fact, their camp area is about 150 to 200 metres away from where our number 5 drill hole is. Spey is on the fast track at the moment, and basically Pocitos will be drilled this Christmas. Then we'll go and put in probably 4 or 5 production wells. We'll come up with a resource. We'll send that data to Ekosolve. They will size up a plant. We'll complete all the environmental permits, and off we go to the races. So I suspect that Spey will be the 3rd lithium manufacturer in Argentina. Likewise, down at Incahuasi, right next door to Ganfeng, because the flow rates are good, 4 or 5 production wells, and that should do it to put a 10,000 tonne plant down there. It's 45 kilometres from the town of Tolo Grande, so they have all the necessary bits and pieces to become a producer. 10,000 tonnes of lithium is 700 million a year. Take off the costs, call it 600 million. And divided by the number of shares, and you get a pretty healthy share price. And that's the name of the game for Spey. We're pushing as fast as we can to get into production.
Now, the company just announced last week that it had successfully extracted lithium carbonate using Ekosolve technology from a brine solution. Can you tell us more about this?
Yeah, this was a significant breakthrough. It was basically another run using a 200-litre batch, which produced the high quality of lithium carbonate, which is really a function of the high quality sodium carbonate we put in. But the real exciting piece is the fact that we've got 96.03% recovery of all the lithium in the brines, and they weren't rich brines. They were 180 ppm roughly. And only 2.7% of the solvent was used, and it took 22 seconds per pass. So we did 11 passes to get 97% recovery, which took less than 3 minutes. So this is phenomenal. It's almost unbelievable that you can achieve that in such a short period of time. So we're really excited about that, because what it means is that over a 24-hour period, we can be processing significant quantities of brine, which then leads to the better economics for low concentration brines. And clearly in the bigger picture, this now makes geothermal brines, petroleum brines, and other sources of brine now viable, as opposed to being not possible. The other thing was the high magnesium. Incahuasi has a high magnesium content in the brine, and typically that's been the showstopper for most processes. You either have to scrub it out or use fractional crystallization to get rid of it. On this occasion, it just flows through. As I said, 22 seconds per pass, and we were done and dusted. So it was fantastic news that we got the purity grade, but that really wasn't the trick. The trick was getting the high recovery, using low amounts of solvent, and which is fairly cheap, by the way, so it's not a big deal, and coming up with a fantastic end product.
Okay, great. Well, Phil, before we let you go here, can we ask what catalysts can investors look forward to as we head into 2023?
Yeah, sure. Look, a fairly extensive drilling program at Pocitos II, and likewise a production well. We've done 5 holes down in Incahuasi, so we'll be putting in a number of production wells down there. Clearly the NI 43-101 proven and probable resources after we do the measured, indicated and inferred. And then basically our environmental impact statement for production. They're the key milestones that I'm busily trying to achieve in the next 6 months.
Okay, perfect. Well, Phil, thank you so much for coming on today and sharing your story with us.
A pleasure, Cassandra, and thank you for having me.
Thanks for watching. That's all we have for you today, but don't worry, we'll be back tomorrow, so make sure you hit that notification bell so you don't miss us.